Oh, oh, wait, are we live?
No, no,
Oh,
no, no. Well, yeah, yeah,
all
kind
right.
of.
All right.
um, Hold on, give me a second. So now we should be on YouTube. Okay, we live on YouTube. Um, okay, hold on, let me get the live popping up. All right, brother, what's good? What's good, man? How you feeling? How you feeling?
Man, you know what? I'm good. And after our conversation yesterday, we had to have a discussion because when we were having our private talk, I was like, all of these lessons for for younger investors into how to approach these market dynamics. I mean, it's a considerable kind of amount of money, so you want to make sure
Mhm.
that folks understand how things have definitely changed, and so it's good that we're doing this for the people.
Yeah, man, we had to do this for the people. I made the post and people were like, "Are you trading options? What you doing? What's going on?" And,
Mhm.
and I told them like, if you been following our lives or anything we've been doing, you already know I've been saying, "Hey, I only got two or three stocks."
Yep,
Like,
yep,
like I'm focused on my business, but I have two large positions. Well, my
yep.
two largest positions has been two and three stocks.
Right.
So, I've been screaming Rocket, and when I posted it up because Rocket Mortgage, they actually sponsored the Super Bowl. So, I
Hmm.
was just feeling funny, whatever. I'm like, y'all watching Rocket Mortgage Super Bowl. I own the stock. We not the same, right? Bro, so many people in my DM, it's still on my page. They like, well, it ain't went up, it ain't moved, it ain't moved, it ain't moved. And I'm just thinking, like, well, I'm in it for the long haul, right? So, you know, it was up probably 12% when I made that post, which is decent, right? A lot of people don't, 12.
Okay, so pause. That's better than decent, right?
Yeah,
So
yeah.
I mean, like people don't understand the average return in the market is 7%. You're talking about 12%. You have already won the game. So I
Hmm.
just want like you're humble, but you
Yeah.
had already won. All right, now keep going.
Yeah, so I actually bought the stock at the IPO price. I think the IPO was like $18 or whatever. They were actually trying to go 20, but they IPO'd in the middle of COVID in like August of 2020.
Yeah.
So they were aiming for 20, and their bankers and all the investors was like, we'll give you 18. So they
Mm-hmm.
went to 18, they went at 18. So I bought at 18. And when I bought at 18, I had so much money, right? So I just bought the amount of shares I could afford then. Then as I got more money, it had went up to like 26. And then I was like, okay, I don't want to buy it because it was on kind of like a frenzy, right? When all the stocks were going crazy. So I didn't buy then. It went all the way down to like 19. So I
Mm-hmm.
loaded up on some in 19 and I was just like, this is like my second largest position. That's when me and you talked about it.
Mm-hmm.
And then listen, it's so crazy. I made a tweet, I made a Instagram post like, I'm honestly considering, and I was kind of joking, but I was halfway serious. I'm honestly considering selling all of my stock because at that point I owned Facebook, Shopify. I had sold my Berkshire Hathaway. I own Facebook, Shopify. Okay, go ahead. Yeah, I own Facebook, Shopify, and Rocket Mortgage at that time. So
Mm-hmm.
I'm like, okay, my Facebook up 25-30%. So I'm like, something's telling me Rocket Mortgage is gonna have a really, really good earnings call. Because this was their second earnings call because they only been public for
Mm-hmm.
for 1 quarter at that moment. So I'm like, something is telling me, man. It just kept itching on me. So I'm like, okay, sold all my Facebook stock. Um, and it just doubled down into Rocket Mortgage, man. So I bought some more, like like the earnings call was on the 25th, so I probably bought it on the 20th, right?
Mm-hmm.
And I'm running my
What,
business
what month? What month? The 20th of
February.
February.
Yeah, so
Okay.
I just really bought it. I made the post about, putting all my money in one stock like 4 weeks ago. And then I actually sold my Facebook and used the profits and all my principal amount to invest into Rocket Mortgage. So at this point, I only own Shopify, which is my largest holding, and then Rocket Mortgage. And I'm just constantly running my business. I don't check my accounts every single day because I'm a long-term investor. I'm not really trading, but you have been kind of flexing my trading muscle a little bit because a lot of times these stocks be so volatile. They go up 40% one day, and I'm just sitting there long term as a long-term investor. I don't know what to do, right? I
Mm-hmm.
told you, like, my as a new investor, my biggest thing is learning when to get out, because I know when to get in. I know how to evaluate and to get in, but that's
Right.
my biggest thing, is knowing when to get out. So,
So you know
it
what?
had
Yeah, go ahead.
went up 40% before.
Hmm.
It had
Hmm.
went up to like 26 or 28 and I didn't sell. Then
Hmm.
it went down to 19. So my average on my purchase price was probably around $19.
Hmm.
Um, and then I looked at the stock, and it had obviously went 3 days ago. It had went no 2 days ago. It had went up 25%. I didn't notice, and
Right.
then the next day it went up 45%. So at this point, I'm up probably like 70 or 80%. That's when
Mhm.
I hit you in the DM, like, bro, I don't know what to do. I'm
Mhm.
long Rocket Mortgage. Like, this is my second largest position,
Right.
but something's telling me to sell, something's telling me to keep, something's telling me to trim. So, like, I need
Mhm.
some advice. Like, I don't know what to do. I'm submitting, like, I don't know what to do, right? And then I think it was at like probably like 34, 35
Mhm.
then. So when we had our conversation, I don't know if you want to chime in and speak about
Right.
what you said, but yeah, go ahead. I want
Well,
people to hear it.
so what the reason why, for people who are listening, right, is the reason why we're having this conversation, why it's so important, is you have got to know why your stock is behaving the way that it does, right? Sometimes it's because it has a technical measure that says that it's going to go up higher. Sometimes it's just pure momentum and everybody likes the name. Um, but in certain cases, and this goes with Reddit, right? We haven't talked about Reddit. We haven't
Yeah.
talked about why, GameStop and AME and to some extent Rocket Mortgage, why these things go higher, and that's because of a short squeeze, right?
Mm-hmm.
So for the savvy investor understands when one of their stocks is in the middle of a short squeeze, right?
Mm-hmm.
And a short squeeze occurs when you have a stock that jumps up high, right? And traders, which have essentially bet that the stock would go lower, have to buy more of it so that they don't lose as much, right?
Right.
So for people who don't understand this, there are people who can purchase options, and these options are a kind of insurance, which will say, you know what, we think that we're going to place what you call a put on a stock, and we're going to bet that this stock goes down, but it
Mm-hmm.
never happens. And so the Reddit community has all said, you know what, we don't like these short squeezers, right? Because these folks are parts of hedge funds, big money, and they start to juice up the price of these stocks. Now,
Mm-hmm.
unlike GME and AME, Rocket Mortgage has fundamentals, right? Like it's
Right.
actually a good company that's, it's a different scenario. However, even good companies can be in the middle of a short squeeze, right?
Right.
And if you are a investor thinking long term, you have to think about how much money you want to leave off the table because you want to invest. Because if you have a stock that's in the middle of a short squeeze, again, not increasing because, like, for example, there's a company called Eli Lilly. It's a
Mm-hmm.
pharmaceutical, and in 10 days they may be coming out with this huge Alzheimer drug. And if
Mm-hmm.
this Alzheimer drug actually works, their stock price is going to go up. It's going to shoot higher, but it's going to
Right.
shoot higher. Your Rocket Mortgage shot higher without any big news. It was after its earnings call, as you noted. It just shot higher.
Mm-hmm.
You have got to learn as a young investor. You have to take the money. As you and I joke around, we're like, why are we in the stock market? For one reason, to make money, right? And if if you don't, then you're in it for some other reason, right? So
Right.
for guys, most of you all who are in it, if you're in a stock, it's in a short squeeze. And let's talk about why this was in a short squeeze. This is a mortgage company that will do better when interest rates are lower, right?
Mm-hmm.
Because more homes will be sold and you're gonna have more volumes. Everybody wants to buy when there are low interest rates.
Right.
But as I'm going to talk about later, these interest rates are creeping higher. And so people just decided, regardless of the fundamentals of the company, they're going to put a short squeeze on it.
Right.
Take the money. And so, I'm not saying you have to take all of it, but you got to take a portion off the table, right? Because you don't want to look back and say, man, this stock was up 70%. And 2 days later, you're back to where you started. Because you're going to say, I could have, should have, would have, right?
Yeah.
So why don't you go on, and I have no idea what you actually did, but why don't you talk about what happened later on today for you?
Yeah. So after our conversation, and I was already like on the edge of knowing what to do, but it's always that euphoria of if it went up 100%. Well, what if it go up 200%, right? What if it go
Right.
up 300? So it's just be going. You can't train for this. It's like
Right.
shooting a game-winning free throw. You can't train for that. You only have to get used to doing it.
Right.
So
So
once you
that, my friend, is what we in the market call animal spirits.
Mhm.
Right there, that is the quintessential animal spirits. Man, well, it went up 70% yesterday, and you start fooling yourself thinking that that's normal. You're like, dude, what if I made 150 tomorrow? Right?
Dude, yeah.
That is animal spirits. That is capitalism. That's New York City. You gotta love greed is good. Back in the day, that old movie called Wall Street. That's what that was. But I have it.
So I use Charles Schwab, right, for my trades or whatever. So I after our conversation, it was obviously after hours, right? So
Right.
the market had shut down and it closed at like 37 5 or something like that, right? Whatever. And then you can see like what the after hours are doing.
Right.
So
You were
after
up. You were up all night.
no. So actually, I wasn't up all night. I was on the phone with my girl, but I woke up at like 4 in. Bro, I woke up at like 4 in, just like I had a dream, bro. Like I had a dream. It had shot up to 71%. I mean, no, to $71. So I'm thinking like, oh my God, right? And right after we had got off the phone, I had put a sale in for like a stop limit at the price that it was at, right?
Right. Okay.
So I put my trade in, but then the after hours went up to like $45. So I'm looking at the after hours and I'm looking at how much money I left on the table. So I'm like, oh my God, right?
No.
Listen, but I had woke up at like 4 or 5 in after I had my dream or whatever. So I'm looking at the after hours and it's at 44.50. So I'm like, I did the calculations like, oh man, I'll leave this much money on the table. So so I actually canceled I canceled my position. My stop limit or whatever. I canceled it at like 37. And then, I had fell back to sleep. And then when I woke up, it had went from like 44 after hours, and it's like 8:30. So it was at like 40. So I'm like, oh my God, it's going down, it's tumbling, right? So I have Reddit on the app. I have the Reddit app. I actually don't be on there, but this is my first time ever being in the middle of a Reddit situation. So I'm on there reading, right? And bro, it's like the euphoria of the moment. It's ridiculous. So I'm on there and they're talking about, yeah, we're gonna
to the moon.
We're gonna go into mortgage. We're going into Rocket Mortgage. It's going to the moon. It's going to the moon.
Yep.
And I'm reading their messages and it's going down. So I'm just like, man, forget about this, right? So I'm just like, I'm gonna be disciplined. So I actually did a limit. Not a stop limit. I did a market. I just did a market order.
Oh, okay.
So it came out around like 39.
Okay.
So when it came out around 39, I sold. And I just cashed in, and I'm just like, I made the right decision. And then I just called my girl. Like I called my girl and told her like, I just made like, whatever, right? And then I made a little post that I made, my first time ever making $10,000 on an investment in one day. But then I told her like I just made like $13,000, and she's like, "Oh my God, like on what?" Because I be showing her like my stocks and stuff sometimes, and she like, "No, go ahead."
No. So the point of all of this is that you use the D word, which is discipline. Young investors, new investors, they don't have discipline, right?
Right.
You only make money when you sell it, okay? And sometimes the market gives you a gift, and if they give you a gift, you take it. You know what I mean? And you live to invest another day, right? Because regardless of what it does. Again, the short squeeze it goes through peaks and valleys, right? But understand the word short is in there for a reason. It's not a long squeeze, it's a short squeeze, right? So, it can go higher and lower, and tomorrow it could shoot up high again. You're like, oh, but you make, this is when you start trading, okay? And if you really like the company, you wait till it goes down to a point where you can dollar cost average in, right? But you have to, when you have something like that, you have to make your money, right?
Yeah.
Like you have to make your money. And for, I understand that social media, especially, it can be very intoxicating. You know what I mean? And I think that when you are a new investor and you see, people making a lot of money on individual stocks, the one response I always get is, man, I wish I would have. Man.
Yeah.
And remember, for you guys, I was like, look, James, I've never made you do anything, right? You are a grown man, you're everything. But trust me, in my seasoned years, like, you have to take something off the table so that you don't lose all of the great things that you were doing. And you were a wise guy in terms of identifying a stock that had potential, because usually short squeezes are good companies that, due to the setting of interest rates or something that's out of their control, they know it's going to go down. You don't always short squeeze like the worst companies. Like, Rocket Mortgage is something that I would encourage you to re-enter. You now have 10 or whatever many $1,000s extra. Why don't you put that back in Rocket Mortgage when it goes down to where it should be? Okay. Yeah. And then you even get more equity and ownership of a company that you really love. Now, the other conversation that I want to have with you is about, interest rates and banks in the market. But, the whole point, take what the squeeze is giving you, but do not stay in there too long. All right. It's a pyramid scheme at its best. And if you're,
that was the mistake I was going to make. I was going to, before I consulted with you, I'm like, I'm gonna just ride it out. Like, I'm gonna see how high it can go. And then when it start going down, then I'm gonna sell. But I know I don't watch the market that often because I have a whole business I'm trying to run and build, and I got employees I'm training and all that. So I'm like, I'm going to miss out because I didn't even know the stock had went up 80%. Yeah. So if I didn't know it went up 80%, going down 80%, I probably was going to miss it.
So I'll give you another piece of advice. If you're only going to have, 3 or 4 stocks, and if you're going to have a large position in those, you need to watch the market. Okay, it's different than if you had the S&P 500, right, some index fund, and you said, I'm just going to put it in there because it's because it's a blend of a lot of different stocks. It's much less likely to have these super high days or these super low days. But once you commit to investing, and that's the thing. Everybody says that they're an investor until they're not. And and I've always said that. It's like, yeah, I know why you're in it, but if you want to make money, you have to trade a little bit because you totally ignore what is going on. And you won. You know what I mean? And what I don't want is for other young investors who see the short squeeze and they say, wow, who haven't gotten into it, and the stock is at 70. Oh man, well, if it went up 100% yesterday, it could go up 50% tomorrow because that's animal spirits, right? Those are the people who lose, and those are the people who say, the stock market is rigged. I don't want to invest anymore. Blah, 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 right? Like, people always talk about the ones who make money, but they don't follow up on the large. I mean, for every person who makes money, there's somebody who loses.
Yeah, I mean, that's what people was talking about in the comments. Like, what did you do an option trade? Why you don't ever show your losses? And I'm like, well, I don't really put up my stock investments anyway. This is the biggest I've ever made in terms of stocks, off an investment. So this is like the first time this happened.
Yeah, and in general, like, you don't need to. Like, it's your money, and for everyone out there, like, I may put up like what percentage I may have won or lost in a day, but mature people never put up how much money you have, in the market, because then the handouts come later on, right? What is you want to go out there and demonstrate the right way to do things, and that's what you've dedicated, your Instagram site for, your YouTube site for. Like there's a right and wrong way how to do stuff, and you are figuring it out as you go along, right? And I guarantee you, the next time, one, short squeezes, they happen all the time. The euphoria of all this will definitely wear off, and you're gonna be like, okay, whatever, right? But you're a disciplined point of view, you're going to know this is going to go up some amount of money. I'm not going to catch it at the very peak, but I'm going to take some of it because I've made my cash, and I'm going to move on to do something else with it, right? And that's and if it weren't, like if you had Facebook or or Shopify, you could have that for 2 years before a short really comes into effect. Like who knows? No one can predict them, but that's the point. But the other point that I want to talk about real quick is, you and I have been talking about a large number of tech trades, right?
Yeah.
So, NVIDIA, again, my favorite, chip stock. We talk about Google and all the FANGs and everything. But growth stocks do well when interest rates are low.
Right.
Okay. And usually, if we weren't going to talk about this short squeeze, you and I would talk about how the very first thing I always ask about, well, what are the banks doing?
Right.
And what's what you call the 10-year treasury note, which shows how much debt this country has, and the interest rates are all applied to this 10-year treasury rate. And so what's happened is that the rates are still historically low.
Right.
On from 0.5% on the 10-year to now about 1.5% on the 10-year in about a month. That the rate of the increase, which is freaking people out. Okay.
Right.
And because of that, growth stocks need low interest rates to have a higher multiple. So to dole that out, that means these FANG stocks, these growth stocks, for them to be as expensive as they are, they require really low interest rates. And so what's happening now is, because vaccines are coming and that the economy is getting restarted, interest rates have to rise, right? Because interest rates are low when there's not a lot of economic activity.
I mean, like half of the country just released their no mask mandate. So I mean, that's a step forward, right?
I mean, well, from a financial perspective.
Well, yeah, from a financial and stock perspective and reopening position. Now, I don't know about the medical and the.
No.
I don't know about that one.
No, agreed. But when we say that, it's not just, well, we're going to be using Zoom less because we're going to be out at meetings again. It's fundamentally an interest. It's all about your interest rates. Okay. And because of that, the tech trade is going to not do well. Right. And in my opinion, right, and I would say the consensus of most people, interest rates are probably going to go up till probably around 2%. We're at 1.5% now, right? So there's going to be a lot of damage on tech stocks, when the 10-year gets between 2 and 2.25. All right.
Right.
So the question for people is, do we hang on to our tech stocks as they go there? I have long-term positions in Google, Amazon, Microsoft, NVIDIA, Zoom. I have all that stuff, right?
Right.
Do I sell it for what will do well, right? So if we're reopening the economy, what's going to do well? I mean, like, retail, like Macy's,
right.
Ralph Lauren, people are going to be spending money on airplanes. They're going to travel. Rental cars, they're going to be going to casinos. They're going to be, all of these things are going to pop up, as well as industrials, right?
I was looking at, I was thinking about getting into some casino stocks. We can talk about that, but but as a reopening trade.
But also things that, like, there's a huge stimulus plan, right? And that's love infrastructure. So what is going to go up? Caterpillar. Why? Because Caterpillar, they make stuff. Cement companies,
Mhm.
steel, like Nucor, Dow Chemical.
I was just about to say Dow. My friend's he's a CPA and he works for Dow, and
Yeah,
he be asking me about the stock market, and I'm like, bro, you work for a great company. Like
a great.
you need
Yep,
to, they got their stock purchase plan, and I'm like, bro, you need to. And the stock was down because of COVID, because the building stops, and I'm like, bro, the world is never going to stop building, bro. Like you need to get in and
right.
hold.
This stimulus plan is even going to invigorate all this. So what new, everyone who's entered the market, they're like, they want some sexy shit, right? They like, yeah, I got my Facebook, I got my Amazon. Let me tell you, the market is so old school. And people, and I've told you, before how I was repositioning, because the things that what's really sad is that these cruise companies, they haven't made a dollar. They're still
Yeah,
sitting in stocks, but their stocks are super high and rising.
yeah,
While these cash cows like Zoom and Shopify and everything, they're going down. Why are the good companies that are making money going down, and the bad companies that are sitting there without any revenue, they're going up? And
right.
it's like, well, what should I do? And I think that, everyone should, again, take, and I'm about to, practice what I preach, because I actually trade less than you think in
Mm-hmm.
my core positions, right? But, tomorrow I'm going to take some off, and I've been slowly kind of, getting rid of some of my stocks, and I don't
Mm-hmm.
want to completely get rid of them. But if I just stick with them, I'm ignoring what the market is giving me. I'm ignoring what interest rates are telling me, right?
Mm-hmm.
I'm ignoring that. Like, I always tell you, it's like if you're playing basketball and there's a zone defense, don't play a man-to-man offense. Like,
Right.
that you have to take what they're giving you. And what the market is clearly saying is that the market believes that we're going to reopen. So if you
Mm-hmm.
believe that we're going to reopen, that the vaccines are going to, restore some sense of normalcy, and that interest rates are going to rise, all of those things are not great for the things that many young investors came into the market looking for, right?
Mm-hmm.
So, banks, they do well. Interest rates go up, they do well. Man, Goldman Sachs, Bank of America, these things are boring, okay?
Right.
Boring, boring, boring. But get a bank, get oil, commodities, those type of
Mm-hmm.
things. But just understand, because if you just sit in tech and you have not diversified into what you call a cyclical or the reopening trade, you're going to get burned, and I love all of these companies, and I'm not going to sell completely out of them, but I'm reducing my position so that I can get into, this, a more cyclical trade. So I just, I haven't really had the opportunity to talk to folks about that. That's
Mm-hmm.
really, really important. It's not too late to do it. I know a lot of people have already, been doing it. Like you were looking at casinos. Yeah,
Mm-hmm.
go and get some MGM, get some Las Vegas Sands. Have fun with that. It
Mm-hmm.
was up, again, it's not the 70% rate increase, but it's been pretty consistently, that Norwegian cruise lines going up 3 or 4% a day. It may
Mm-hmm.
take to get there, but you'll still get there, and
Mm-hmm.
diversify a little bit.
Mm-hmm. What companies do you think I wouldn't say are immune to the reopening, but they are not necessarily, but I look at a company like a PayPal. Like that's a fintech company,
Yeah.
and I feel like they are positioned to no matter if the country reopens or not, they're a fintech company. So people are still going, e-commerce is still going to do really, really well.
But
So and even hold on, even like Shopify. So I'm trying to evaluate like Shopify. Like, okay, is that a stay-at-home play or is that a tech play, e-commerce play? Like I'm trying to really figure out where I want to mush that
so,
stock into.
so understand, there's a difference again between how much money or how much profit a company makes versus what their stock price is. That's what I'm
Mm-hmm.
saying. Now there's a complete divergence of that.
Yeah.
Look at, the first one you said was PayPal.
Yeah.
PayPal and Square. I love both of those two companies, right? And it's going to pain me to cut some of it, although Square is becoming a little bit more interesting. Um,
You said Spirit Airlines?
no, Square,
Oh,
Square and
Square.
both
Okay.
fintech, right? Their multiples are high because interest rates were low, period,
Mhm.
right? So their multiple has got to come down when the interest rates go. It doesn't mean that they're not going to still produce huge amounts of profit. And the fact that they make a bunch of profit is going to help the multiple not come down even further. But,
Right.
the problem is that, there is a sense of urgency in that these things are kind of coming down pretty quickly, right? And again, I'm not going to completely get out of PayPal or Square. I like them, but I'm gonna lighten them up. Or even Shopify.
Mhm.
E-commerce is here to stay. We will always, like, the way that people navigate it has been changed forever, right? So it can still have the growth. But so let me give you a better reason why this is tough. Look at Shopify. If Shopify next quarter, right, in Q2, they're going to come out with their earnings. Their earnings, they have to compare what they made in the second quarter of 2021, and they're going to compare it to what they made in the second quarter of 2020, right? They're going to compare last year. Now, they may make more money than they did last year, but is the rate of growth the same? And the answer is probably not. And so the irony is when the rate of change decreases, the multiple goes down, right?
Oh, okay. So you're saying, like, okay, let's just say from January to March is first quarter, right? So because of COVID happened right in the beginning of March, and their stock shot up. So the rate of return from January, from that first quarter, let's just call that 50%. And the rate of return from January 2021 to March 1st is probably 10 or 15%. That is going to lower their multiple. Am I
Right. That's exactly right. Which makes no sense because you're like, but they're making more money, right? Yeah.
right.
They are by definition more profitable than what they were
They
last
got
year.
a ton of bit more users, all that, right?
But they're not making as a percentage, they're not making it as fast, right?
Right.
Even though they're making more, a great quote from a guy, it has a guy named Jay Kaplan. He said, if you're not running faster than the guy beside you who's running fast, then you're getting slower, right? So it's like it doesn't it doesn't matter, right? So that is why these wonderful profitable companies are going to slide down,
Right.
because their rate of growth can't be the same because the interest rates that are supporting them have gone up. And it's dumb, but that's just the way. I mean, it's not dumb. It's just the way that we value the price of a specific stock, right? So, understanding that, you then have got to look at, well, what has been the rate of growth of things that you can still do comps for last year that look really great, dude. So if Norwegian makes $20, that's more than what they made all of last year, right?
Right.
So so that's why all these people are coming to these companies, even though they're not making money. They know that once they do make money, that rate of change is going to be insanely higher than last year, and so their multiples will then go up, right? And that's why that's the name of the game, is understanding, again, interest rates and multiples. So that's why I encourage everyone. There's some really, really, like, eventually these companies are going to become in favor, right? So the tech stocks will come in, but it could be a really long time. And you don't want to, I mean, when I say a really long time, it could be years. And people who haven't invested, like really invested, they don't understand that the market works typically in years. It doesn't work like this artificial, COVID thing that happened, right? So understanding that these things could be down a long, long time, you still keep them, but you need to make sure that you are appropriately diversified so that you can take advantage of the market and what they're giving you right now.
If you're in one of these positions like the Fang, the stocks that may be affected by higher interest rates and the reopening trade and things of that nature. What do you suggest trimming? I mean, 15%, 20%.
I mean,
Like
yeah,
what's your strategy on that?
yeah. So it really depends on, I mean, it depends on what your entire portfolio was. So if you said that you had a 100% portfolio of tech stocks, then I would say, well, you've got to reduce your tech stuff by 60%, right?
Your
Now,
tech
if you,
exposure? Yeah.
oh yeah, totally.
Yeah.
Yeah. Let's say if you had $10,000 and they were all in Amazon, I'd say, well, you got to sell off $6,000 of that if you really love the company, right?
Mm-hmm.
And put it into something else, right? Now, if you do have, your Berkshire Hathaway, which is
Mm-hmm.
actually a real stock, I mean,
Mm-hmm.
he bought a bunch of Bank of America. Like people don't understand. Warren Buffett, he knows he bought Apple when he
He
should.
actually put out his annual letter.
Yeah,
I haven't had a chance to read it or breeze through it or whatever. I
yeah.
usually read like the first few pages and read his
His,
message.
his first line is something to the effect of, "I absolutely believe in America." So,
Yeah.
you know what that tells me? The reopening trade is on. Okay, that's why. Like, okay, you don't say that unless you're like, yeah, like America's coming back, buddy, right? So
Right.
if I think that if you have, your cash that you just made, personally, I wouldn't put a lot of it back into Rocket Mortgage only because I know where interest rates, people are concerned with housing.
Mm-hmm.
There's a lot of housing, which is great. But when interest rates go up, at some point, like I said, they're historically low, right? So,
Right.
I mean, they're as of right now, it doesn't really matter, right? But at some
Mm-hmm.
point, it will matter. There's the contrarian view that the Fed will start printing more money when interest rates get, because they don't want, in other words, the Fed doesn't want interest rates to go too high or it'll screw up the economy.
Right.
So, but who knows when that is or what's going to happen. But the Fed is absolutely okay with getting the economy started up and sacrificing some of the market, that we got because we want to get everybody back to work. We want to increase our GDP. So yeah, man,
We have
so
we haven't really talked about the stimulus package and how that's going to affect the market. Like what
yeah,
stocks or industries do you think the stimulus is going to affect? Because we know
sure.
that's going to pump money into retail and things like that. But what else?
I'm gonna throw some out for you. One, I think it's going to be a big infrastructure deal, right?
Mm-hmm.
Or something at the infrastructure. So
Mm-hmm.
Nucor does a bunch of steel, right? CRM, they do a bunch of concrete. Vulcan, they're a big industrial that do buildings and chemicals. The Dows, like
Mm-hmm.
those are the ones where, a stimulus plan will help out. Because if you really think about it, they haven't mentioned anything about airlines at all, right? They're
Yeah.
not about the airlines. In fact, a lot of people just want them to go under. But a good company that is doing very well is a great opportunity is Boeing, right?
Mm-hmm.
Because they're already getting orders from these airlines to build more stuff, right?
Mm-hmm.
And Boeing is part of the American kind of institution, and they've already gone up tremendously. Now they were at 345, and they're
Yeah.
still only at like 230 or something. So they
Mm-hmm.
have, they're still down by a third.
Man,
And
I
so,
be beating myself up about Boeing because it dropped to 90, and I was like, it's like I didn't make a mistake on I made a mistake on omission. Like I knew enough. I knew that company was undervalued. Tremendous.
yeah,
I knew you can't start another Boeing tomorrow. It's not like a Clubhouse or a Snapchat that can be started in a couple of years by some guys in their garage. We're talking about infrastructure for America and the entire world. Boeing sell across the globe, and I'm just like $90. I think it was at like 98 or 97.
I think I got it for like, I mean, I think that I started buying it at 79. All right. And then
I didn't see it that low. I probably would have
but,
bought it.
but guess what? I just bought some at like 205. You know what I mean? Because I still think that, again, this is a value trade, company that is so tied to reopening. why it wasn't a mistake for you is that there was some political stuff. Remember, Trump hated China.
Yeah.
Boeing sells planes to China. So there was some other geopolitical stuff that made Boeing less attractive. But now, I mean, that would be a wonderful investment, going forward, because it's an industrial, like any of those companies. If you want to target investments from the stimulus plan, that's what I would look for. Now, again, what are the risks? Well, is it some risk that the Democrats won't get it all together, and then that never comes, that 1.8 trillion never comes. Well, then a lot of these stocks are going to plummet. But generally speaking, I think that that it's going to go. I think that, the Democrats have all these houses of Congress, and so it should be fine. I'll say the only last thing I want to, talk about is a little bit about Bitcoin, right? So when the economy starts to get hot, when inflation happens, usually gold gets really, really attractive because it's a commodity, it's a hard metal, and historically, that's when gold goes up. We have not seen that at all. And why is that? Because people who have historically been investing in gold have been investing in Bitcoin, right? And they're Bitcoin as that hedge for inflation. Bitcoin is unpredictable and you never know what's going to happen to it. But just be aware that when you see these really low gold prices and these really low silver prices, a lot of this is different from anything we've ever seen before. And it's only different because of Bitcoin. I sold my gold position about, I don't know, maybe about 10 days ago.
How long did you hold it? Did you have it for a long time?
Always had it. I just always had gold, like a very, very small amount. It's like maybe like 2% of my portfolio. But
right. Okay.
I was like, dude, it's gold. I did it, and I'm dollar cost averaging into Bitcoin. Okay. And, for me, and me, I'm not that type of guy. You know what I mean? But I've seen enough where I'm like, with inflation the way that it is, I do need some type of hedge. And so for you guys that would traditionally invest in gold, just beware that it's not acting right. And it could start acting right, but it's not acting right now, and it's at its lowest prices since June. So just, be careful with that.
Yeah, man. I haven't really been studying up on Bitcoin. A lot of people in my DMs that, hit me up like 8 months ago, like, hey, I want to talk about Bitcoin. I'm like, well, I don't really understand it, XYZ. And I'll have to do some research. I'm like, send me some information on it, whatever. They never sent it. And now Bitcoin is going through the roof. They're like, can we do a live now? Can we do this? And I'm like, well, I still don't understand it. So like, I don't even know enough personally. I feel like I don't know enough personally to even to ask the right questions, because you have to know at least a little to ask the right questions. Imagine, that's like me, like you're a doctor, right? So you know enough to ask a patient the right questions. Yeah. You can give me all the information in the world. I don't know enough to even get in there and ask. The person can just have a headache, and I'm just sitting there like,
the stroke. Yeah,
you know what I'm saying? Right. So I don't even know enough to ask the right questions, and that's just on me. I need to do my due diligence. My homework.
I think the people who got in it, earlier, they, it reminded me of the Reddit crowd. Very speculative, whatever, right? But some institutions have been adopting it. Square has been adopting it. And I'm not going gangbusters there, but I think that the thing that I want to emphasize with you is just to diversify, right? And I know a lot of people are still very much so overweight tech in their portfolios, but I don't see that outperforming the rest of the market for the rest of the year, if not longer. So, why wait around for something that is probably not going to, again, for all the technical reasons, it doesn't make sense to outperform. I mean, we just look at Zoom. Zoom just said that they're going to make 50% more revenue year over year, and they just went down 10% today. Like, I mean, if that doesn't tell you something, then nothing will, right? Because it doesn't make sense. And you're going to see the Nasdaq go higher, right? But in general, the theme is, dude, it's a cyclical game, you know.
Mhm.
So just be, like I said, don't get all out of your tech, but you just need to understand if you're we're in it to make money, not to be in love with the stock, right?
Right.
Make money, you got to go and take what the market's giving you. So
All right,
that,
man. All right. Hey, listen. If you listen to this, please like the video below, share it to someone. We're streaming live on YouTube. If you're on our Instagram, we're streaming live on Instagram. But if you missed all the gems from the Savvy Doc, if you only listening on Instagram, because you only heard me talking, right?
yeah.
So you can go check it out on my YouTube. It's James Hill TV. Doc, I always appreciate when you come on, man. I learned so much.
Yeah, and everyone, I try to put out. I actually subscribe to a lot of trading services, and so I put those real time trading recommendations from Zacks, from Actions Alert, from CNBC Pro, from my own investment banker. I try to put, those things out there, not as recommendations, but at least you can kind of see what insiders are trading, what commodity traders are doing. So
Mhm.
it's, if you go to the Savvy Doc, it's always free, and you can see kind of for free some of these recommendations. But yeah, like I said, hey man, you made a lot of good decisions in the past
Mhm.
24 hours. Enjoy yourself, but don't take off, and get back in there, man, because you're gonna have losses that are the exact same way. You'd be like, but
Yeah.
just stay even keel about it and stay disciplined, and you'll do really, really well.
Yeah, man. My birthday is March 6th, man. So I'm
So
a
you just
what I'm saying?
birthday,
I'm gonna celebrate. It came right in time.
birthday, yeah. But sure. Well, enjoy yourself, brother. All right,
All right, man. All right, you have a great day.
all right, bro. Holla.
All right.
Whoop. All right, man. You good?
Yeah. I'm trying to
All right.
exit out now and
Yeah, me too.
I'm on the
All right.
live. All right.